We'll talk about Bitcoin's price trajectory in this video, pointing to a possible recovery. For your reference, I have created a chart. We'll talk about Citi and Ripple's latest announcement, which is a noteworthy event that hasn't received much attention yet. It will take some time to process the XRP chart, which is what we will do next. I'll cover it in the next video if we don't have time, but Mr. Charles Hoskins from Cardano goes on a long tirade that you should certainly listen to. Without further ado, let's get started. Sit back, unwind, and enjoy your Friday. The price of Bitcoin is currently $69,849, down 3.49% on the last day. In contrast, Ethereum is down 4.33% at $2,516 at the moment. At their respective dollar pegs, USDT and USDC are both trading. In the meantime, XRP is up 0.22% and trading at a mean lean of 51 cents, aiming to hit 52 cents. From here, where do we go? Bitcoin appears to be on the verge of a resurgence and another test of the $70,000 level. Our next target, if we can reach it, will be $74,000, which we will discuss in around 30 seconds. The market capitalization of all cryptocurrencies is $2,369 billion. How much institutional capital will flow into these markets is the last question. Do they intend to make all of their investments in these markets? Will this be the final bull market we ever see? Or will they merely experiment? 4 to 7 trillion are also visible. Then, until the next bull run around 2029, we see the normal bear market correction, in which the value of all assets drops by 90 to 95%. That might turn out to be the last bull run. The final cycle will be one of these. This one might be it. It might be the one after this. In 2 cycles, it might be. However, more cycles translate into more chances for wealth growth throughout generations. Crypto, altcoins, we're going to move. We'll blow up. Don't stress over that. However, until the institutions start to participate, the markets won't stabilize. Take a listen to this discussion. In our mini-series, The Future of Networks, we ask all of our guests this question. What do you think will happen to digital assets in the future? You may be farther away than you believe. Of all the questions, that is most likely the most challenging. I assume you brought up the idea of a digital identity? That, in my opinion, must occur, and it must occur on a very vast scale. I don't know how it works because I'm not an expert in digital identification in general. However, given how much we're dealing with in the payments ecosystem and how tokenization is being considered, that's actually one of the largest obstacles or problems that I don't believe the industry as a whole has resolved. Maybe it's because digital identity serves as a public good, and if one entity can solve it, it will have a significant positive impact on the ecosystem as a whole. Perhaps there is now some underinvestment in this area. Tokenization won't function unless we can figure out ID, however, I'm not sure if that's a forecast. Therefore, you have some common identity that, goes through the KYC compliance checks and other things like that, whether you're participating on a public blockchain or a permissioned one. I think this will make it much easier and more transparent for regulated entities to use both permissioned and public blockchain networks. Catherine was the first to share this information on Digital Dispatch. Financial services will be greatly streamlined if digital assets and digital identity are kept in a single wallet. It was a pleasure catching up, as usual. People, digital identity is coming. This will be the final element put into action. You will be able to see everyone after this is installed. Everyone. All big institutions. All governments. Everyone begins to participate in cryptocurrency. You stated that it is anticipated that the scale of the cryptocurrency markets will surpass that of the stock markets. This is the anticipated course of events. Aaron Nozel suggests reading the Regulated Liability White Papers part below if you believe ISO 20022 is unimportant. It makes up a large portion of the total image. Another is an instant settlement. Wink, wink, immediate resolution. Although Quant's Overledger offers RLN interoperability, this does not exclude Overledger and XRPL from collaborating. They can. I must make it clear that RLN leverages Overledger for interoperability, even though this tweet may not be well structured. Why can't banks use cryptocurrency? David Schwartz asked in response to my mention of the XRP ledger in the same tweet. It's a terrible message. According to him, greeting messages are necessary to have. In other words, the instantaneous transfer of digital assets along with swift communications depends critically on the switch to ISO 20022, which allows for quick payments and great messaging. There will be a lot of competing solutions. Along with their work on the XRP ledger at Ripple, the architects have built a method to enhance the liquidity of these assets and create a global solution for the immediate settlement of multiple assets. This is exactly what Ripple stablecoin will do. It will make XRP more liquid. Thus, in a world with 352 distinct USD stablecoins, tokenized assets, central bank digital currencies, and a wide range of crypto assets, Ripple stablecoin provides a solution for both quick settlement and fragmented liquidity. It claims that financial communications have mostly been resolved by structured ISO 20022 messages that are sent at breakneck speed. We have discussed this story many times. You must have an instant payment to receive an instant settlement. ISO 20022 implementation was essential. Swift and this transition are forcing everyone to upgrade their systems to be DLT compliant, which is why it's so critical. Take note of what's happening. Keep in mind that dealing with governments and banks always takes far longer than you would like. Dealing with banks and governments inevitably entails this, especially when discussing the enormous sums of money at stake.